Hi, and welcome to Crypto Smackdown, where I give you all kinds of information regarding crypto. We're going to keep it very, very basic though. We're not going to go into crazy detail. If you're a first time investor and you're looking to get into the crypto markets, there's certain things that you need to be aware of, and there's also certain things that you need to do to protect yourself from a security point of view and also a monetary point of view. So today we're going to start off with the absolute basics. So you want to get into crypto, or you want to get into investing, there's a few things you need to know. Firstly, most investors, what they initially do when they're getting into the market is they directly go to a platform where you can leverage trade. That basically means that you can effectively times your investment on an exchange, and whatever the investment is on a buy or sell, you will get times that, or potentially lose times that. That's what your typical new investor will do. So I'm here to tell you that there are other ways to do it instead of trying to trade it. So in front of me, I have a page where you can see the difference between fundamentals and technical analysis. This is paramount to you getting into crypto and digital as an investment. Reason being is that you need to know the differences between advice, which is via news, and what some of these crypto tokens and coins come out with. And then there's also the other side, which is the technical analysis. So you might see some YouTubers who are talking about technical analysis, and they're going into detail about the charts and how they're formed and how the pricing is. And effectively, you need to be able to differentiate the two in order to be able to understand where your strengths and your weaknesses lie. Most don't really understand this, and first video they see on YouTube to do with crypto, they're straight into it, or the first search on Google that they use, straight into it, and it will cause you nothing but problems. So, in a nutshell, fundamental analysis aims to determine intrinsic value by looking at the strength of the business, a financial analysis, and the operating environment, including macroeconomics events. Technical analysis analyzes past market performance by looking at the chart activity of price movements, volumes, moving averages, and the statistics of various outcomes. Fundamental analysis assumes the efficient market theory, holds in the long run, and attempts to take advantage of inefficiencies in the short run. So, as you can see, there is fundamental differences between the two. Fundamental analysis is basically more so about uh, what the company's doing, or in this case, the token or the crypto, and what its long-term proposition is. Whereas technical analysis basically looks in between the fundamentals to work out what the pricing is, or effectively will be deterministic of what it sees on say like a chart. It also says technical analysis assumes fundamentals are already priced in and tries to find patterns that lead to outcomes which high probabilities of occurring. So that's basically the charts really. Technical analysis also captures the psychological aspects of the market in the review of past patterns, whereas fundamental analysis fails to factor in investor psychology, which basically means with technical analysis they're looking for trends in the market. Fundamental analysis doesn't really do that. Fundamental analysis goes on effectively, how much budget they have, what are their plans for the future, what are they effectively proposing for the project, etc. Who are their partners? So I think I was around here. Whereas fundamental analysis fails to factor in investor psychology, but believes fundamentals will rule in the long term. So short-term psychological blips will correct themselves. In general, there are differences in the types of investors that gravitate towards a specific type of analysis. Technicians are usually more short-term traders by nature, contrasting with the long-term view fundamentalists generally take. So, as you can see, there are two types of investors, and you have to effectively pick which one you are. By the way, this article is Investopedia, and the person who wrote it was Christina Succi. I've also got another article which is a little bit more in depth in terms of what each of these areas offer. So in here, as you can see, this article's by Jean Folger. Investing and trading are two very different methods of attempting to profit in the financial markets. Both investors and traders seek profits through market participation. In general, investors seek larger returns over an extended period through buying and holding. Traders, by contrast, take advantage of both rising and falling markets to enter and exit positions over a shorter time frame, taking smaller, more frequent profits. So the key takeaways, as you can see, investing takes a long-term approach to the markets and often applies to such purpose as retirement accounts. Trading involves short-term strategies to maximize returns daily, monthly, or quarterly. Investors are more likely to ride out short-term losses, while traders will attempt to make transactions that can help them profit quickly from fluctuating markets. I will be going into detail about specific coins that I'm invested in, and I will probably keep it to those coins unless I decide to invest in other coins. But what I want to basically say was that with investments are long term. So um, within crypto, you could basically buy a portion of coins or tokens from an exchange, and you can hold those coins, and you would hold those coins for maybe a period of years. So it could be, you've just got in time for a bull market and you want to hold it for the duration of the bull market, which could be up to 2 years, 3 years, or even 1 year. From my point of view, I'm an investor. So I believe that holding the coins or tokens for a duration of time, maybe even up to 5, 10 years, not me personally, but I would never leave myself completely out of the market, but I'm an investor, so over the course of 2, 3, maybe 4 years, I will always have uh, coins or tokens that I will never ever touch. Whereas if you're trading, then you would be in and out all day long potentially, or over the course of a day, a week, or a month, you'd be in and out of those trades. You've also got to look at the tax events that happen from you doing trading. You'll generate quite a lot of buying and selling. You generate quite a lot of activity in your account, which will show up in the accounts of your exchange. And when you have to declare your tax for the year, you'll have to then work out all the trades you've done, and it can be a bit of a nightmare. If you're in and out, you'd be surprised at how quick you're, you've been in and out 1,500 times, and you can export CSV, which is an Excel file, but you still need to sift through all of them to work out if you made a profit or a loss over the duration of your trading for that particular year. So from my point of view, I find it much easier and much more, slightly more relaxing to effectively be an investor. The market ebbs and flows. It goes up and it goes down. It goes up and it goes down. And if you get in at the wrong point, you have the potential that it's going to go down. Now, if it is going to go down, you can what's known as cost average your position, which effectively means that you got in at a certain price. As the price is going down, you keep buying more, and then when the price goes the opposite direction, you're then making multiples of what you cost averaged in at. So it effectively brings your zero balance up quicker because you cost averaged in. So you can do things like that, and there are many different strategies to do that, and we will talk more about this, but this is just like an initial video just to give you an appreciation of understanding that when you are a new investor, there are certain ways that there are certain things that you need to think about before you actually part with your money. Technical versus fundamental, you need to decide whether you want short-term gains or long-term gains, and if you want hassle-free journey, then effectively you would probably do fundamentals as opposed to technicals. If you're an emotional person, then investing may be better for you than trading. Well, I hope this was useful for you. I will be back with more, but for now, please comment, subscribe, notifications, tick the little bell, and give a like if you can. First video, just trying to show you that there are easier ways and easy ways to understand this whole crypto space. Have a great one. See you soon.